Good morning and welcome to Social Media, What an Investor Needs to Know. This is an OJM webinar and my name is Jason Wainscott. I am the Chief Compliance Officer for the OJM Group, and before we get started, I need to let you know that OJM Group is a SEC registered investment advisor. This presentation is for informational purposes only and is not intended as an offer or solicitation for the purchase or sale of a security or for the rendering of investment advice. OJM Group is also not engaged in the practice of law and does not provide legal advice. As always, consult with an attorney regarding your specific legal situation. For all attendees this morning, you are eligible to receive a free download e-copy of any of our books or arrange for delivery of a printed copy of one of our books. Simply go to the website ojmgroup.com, pick out your book, and we will arrange for delivery. The objective of today's webcast is intended to provide basic information to help investors be better aware of fraudulent investment schemes that generally involve social media. Facebook, YouTube, Twitter, LinkedIn, and other online social media networks are starting to dominate the headlines and our lives. Many of us turn to social media to keep in contact with friends and family and stay abreast of current events and follow sports and pop culture. It's no surprise that many investors are starting to also turn to social media for information concerning investing. Investors can use social media for research purposes. It's good to use for researching specific stocks, background information on broker-dealer or investment advisors. You can use it for basic guidance on investing strategies, allocation, and portfolio management. And social media is definitely a great source for up-to-the-second news and places for discussing the markets or investment options and products and online forums. As we said, it's a useful tool and it can provide many benefits, but it also presents opportunities for criminals, scammers, hackers, and fraudsters. You have to use extreme caution when conducting any business over the internet or social media, but especially extra vigilant when mixing social media with your investing. Why is social media so attractive to criminals? It's cheap. Many different people or targets can be contacted at a relatively low cost. It used to be that hackers or fraudsters would have to mail information or employ telemarketers to call people over, a series of days or weeks. Now they can push send and send out one email blast or one blast to an entire group on social media. Social media and the internet also provides the appearance of legitimacy. It's easy to create professional-looking accounts, email addresses, or web pages that look normal and legitimate. Most importantly, it provides the cover of anonymity. It can be extremely difficult to track down the true account holders that use social media for fraud. Today we're going to cover some basics. The first thing we want to talk about today is just kind of some basic ways to guard your accounts and guard your information. We'll then go into looking out for the most common scams that we're starting to see over social media and the internet, and then finally we'll wrap up with just recognizing some common red flags. But your first line of defense is your password for any social media account. Use strong passwords, and the strong password would be 8 or more characters with a combination of letters, numbers, and symbols. Don't base your passwords on common words or phrases or your own personal information. It's not advisable to use your children's names or birthdays or your anniversary date. And you definitely, if you have a 4-digit password or passcode, it should not be 1, 2, 3, 4. Keep your passwords secure and keep them in a safe place and out of plain sight. How many people have a post-it note in their office on their monitor that has their passwords written on it, or maybe they take the extra step to put it behind the monitor or under the keyboard, or maybe even in a desk drawer. These are all common places to find passwords. Then it goes without saying you should not share your passwords with others, unless it's absolutely necessary. But you shouldn't share them over email or the internet, and definitely not over the phone to an unknown party. You should use different passwords for different accounts. You shouldn't have one sort of master key that unlocks all of your personal information. And it's good practice to change your passwords frequently, at least twice a year. If you're going to use public computers, you need to exercise caution when accessing your account. So at a library or a school or coffee house or somewhere, if you're going to access your account on a public computer, you need to make sure that you log out of the account completely. Only closing the web browser does not always log you out of certain social accounts. So make sure you click the actual log out button on the social media website to terminate the online session. You should also take the extra step of deleting the computer's temporary internet files and internet history. This will keep people from going back and looking at your history. Use caution when accessing your social media accounts on public wireless connections. So in a coffee shop, the hotel, or airports especially, it's easy for hackers to eavesdrop on internet traffic on public Wi-Fi. And this provides the opportunity to steal passwords and other private information. If you're using a public Wi-Fi to access your accounts, do not type passwords in unless the website you're accessing uses secure connection. So look for the HTTPS instead of the HTTP on the web page address. Avoid accessing or providing or reviewing personal identifiable financial or investment information. So this would include, social security numbers, bank account numbers, and passwords. This should not be used. You should not be looking at this type of stuff if you're on a public wireless network. It's just too easy for people to fish and pull that information into their own stuff. And if you're going to do this regularly, it's a good idea to make sure that your tablet or computer has working antivirus or software or firewall. Mobile devices, generally these apps have, these devices generally have apps that allow automatic continuing access for the user's social media accounts. If your device is lost or stolen, that could provide the opportunity for someone to access all those accounts. So it's best to at least have a password on the device itself. Consider adding a tracking application or an application that can also wipe the device clean clean of personal data in case the device is lost or stolen. Privacy settings on your social media accounts. Don't assume privacy. Many of these social media platforms do not always have your best interests at heart. Regularly review the privacy settings because they change frequently. Make sure that what you're sharing on these sites is what you intend to share and that you're sharing it with people that you intend to share. Otherwise, you could inadvertently share a lot of information with a lot of people over the internet. Once it's out there, it's very tough to get back. Guard your personal information. Many people use a lot of different social media sites, and they're not really certain what they're doing on them. A lot of times they'll publicize a lot of information and just not really paying attention to what you're putting out there. So guard your personal information. Just don't try to avoid making it accessible to everyone. We're going to delete into now the common investment scams. Criminals are constantly changing their approach to stay ahead of investigators and prey on new victims. A lot of these scams have been around for years. It's just criminals have been able to put new twists and modernize their approach to utilize social media and the internet to hit greater numbers. And these greater numbers make you more likely to be a victim of fraud. The most common scams that we're starting to see today, the biggest one is affinity fraud, investment scams that prey kind of upon members of specific identifiable groups. And these can be very large groups, religious and ethnic communities, age groups. The elderly are a common target, but they can also be smaller, more specific groups like professional associations. We're seeing that this is pretty prevalent in social media circles because criminals can join the groups anonymously, gather intelligence on potential victims, and even interact with them to gain trust over a certain period of time. It's common for Ponzi and pyramid schemes to be effectuated this way. So you need to protect yourself from affinity fraud. And we'll talk about some of the more common red flags to look out for. There's also the old pump and dump scheme that's still out there, and this just involves the touting or pumping up of company stocks or securities through false and misleading rumors to the investing public. This used to occur via telemarketing or phones, but now we're seeing it a lot more in social media and over the internet. It's just made it a lot easier for fraudsters to perpetuate these pump and dumps, and it's generally started with a claim on social media, Facebook, and it can be a message urging readers to buy a stock or sell a stock quickly. The promoters will claim inside information or information about certain developments that they know about. They claim strategies or patented algorithms that review large amounts of economic and stock market data to pick stocks and time markets. If you're seeing a lot of this information, it's more than likely, at worst, some sort of bad investment opportunity or, more than likely fraud. Newsletters and spam blasts are an area that people are using for, to disseminate a lot of alleged research opinions, online investment and opportunities, and spam blasts. The vast majority of these are legitimate and provide, some relatively helpful information or, basic information on investment opportunities. But there's still a lot that are conduits for fraud. Some companies pay online newsletters to tout or recommend their stocks, and promoting services can be legitimate, but they must follow specific SEC regulations, generally including disclosures of who paid for the service and the amount of form and payment, so if it's cash or stock. Scammers will often lie or just fail to disclose the payments that were received in an effort to kind of hide the bias or hide their interest in what they're doing. So the fraudulent promoters are going to claim to be independent and unbiased, and that these are recommendations that they stand by, but they're generally standing to profit by convincing others to buy or sell certain stocks. We're also seeing an advent of the so-called high-yield investment programs. These are generally unregistered investments, typically run and promoted by unlicensed individuals. At best, these are terrible investments, and at worst, they're outright frauds. The typical calling card is a guarantee of huge returns with virtually no risk. They're usually sold and promoted via very professional-looking websites, but with these frequent promises of regular returns of as high as 40% or more, you should be very wary. You should have any of these opportunities reviewed by a trusted advisor, because if it sounds too good, it probably is. These can come in the form of internet-based offerings. We're seeing a lot of this now. Online offerings may not be fraudulent per se, but they can still fail to comply with federal securities law. Generally, fraudulent offerings involve a security offered to the public over the internet, usually through a professional-looking website, where the terms of the offer are materially misrepresented. And these common misrepresentations are usually, again, a likelihood of a high return in the absence of any risk. Terms may also fail to provide information about liquidity or access to the funds by the investors. Federal securities laws require that the registration of solicitations of these offerings, but some are exempt. So before investing, check to see if the securities offering is registered with the SEC or a state or otherwise exempt from registration. Before investing, you should consult a trusted advisor about the opportunity. Starting to see marijuana-related investment opportunities over the internet and social media. Scammers usually attempt to exploit the public's interest in innovative industries or sudden growth fields. Scammers have recently used unregistered offerings and microcaps and penny stocks to promote marijuana-related investment opportunities. There's actually been a cease by the SEC in a lot of these, so it's something to look out for. So this brings us, and all these scams bring attention to just the most common red flags that you're going to see. Fraud's not limited to the internet or social media. These opportunities can come from an anonymous source on the internet or a close friend over lunch. So it's just valuable to be on the lookout for common red flags that associate with a lot of these scams. The biggest one, and if you don't take anything away today, at least just remember this: if the opportunity sounds too good to be true, it probably is. Be extremely wary of claims on websites or from friends or relatives about an investment that will make incredible gains, or that has a breakout stock or has huge upside with almost no risk. You can review these promised returns against well-known stock indexes, and then the investments that claim you'll receive substantially more is at best highly speculative and risky, but maybe also outright fraud. Promises of guaranteed returns. Every investment entails a level of risk. Every investment. The level of risk is reflected in the rate of expected return. If your investment is 100% safe, you will most likely realize a low return. Scammers spend a lot of their energy trying to convince you that you can reap extremely high returns without any risk. Do not fall for this. High-pressure tactics. Do not be pressured or rushed into an investment before you have the chance to properly vet and think about it. Investigate the opportunity. If someone is telling you to act now, before you can run it by an advisor, it's time to walk away. You should be skeptical of any opportunity pitched as a once-in-a-lifetime, or if they tell you you have to act now before the window closes. Any of these pressure tactics, they're generally going to allege that they've got some sort of inside or confidential information. Be wary, because again, trading on this information could be illegal. If there's a limited history about the opportunity or the organization offering it to you, it doesn't necessarily mean fraud per se, but it's definitely a red flag that you want to pay attention to. If, when you're researching or trying to find information about the organization and you can't find anything, it's definitely a red flag. Offshore operations, anything headquartered outside of the U.S., it's extremely difficult to investigate and regulate. So before sending any money overseas, you should heavily scrutinize the organization and the investment opportunity. You should make sure that a trusted advisor reviews any overseas investment opportunity for sending or wiring any funds. And be extremely cautious of any investment that requires you to open an e-currency account to transfer money. Investigate the terms and conditions closely. These sites are not always regulated and are usually used as a way for scammers to cover their tracks and wipe out paper trails. You just want to make sure you're not getting involved in any conversion that you can't convert back. And then if there's limited or no written information on the opportunity, that's certainly a red flag. The majority of legitimate public and private securities offerings require very specific disclosures detailing all the risks associated with the investment. These can be pages and pages of documents. If there are no disclosures that are immediately apparent or readily available for review, you should walk away. To sum it up, it kind of brings you to the question of who should you trust? The best way to vet an investment opportunity is utilize the help of a trusted advisor. A good advisor should be able to help separate the good from the fraudulent and assist in discerning how a legitimate opportunity could fit within your allocation, your risk tolerance, and your overall investment plan. If you need help, if you think that you've possibly been the target or the victim of investment fraud, the first step should be contacting your advisor to take immediate steps to mitigate the damage and stop the bleeding. If it's just been one account, you can usually provide some security to the other accounts that haven't been compromised and take steps to start protecting the compromised account. If you have been a victim of fraud, it's a good idea to contact the SEC or FINRA or your state securities regulator to report the criminal activity. That concludes our webinar presentation today. But your next steps, you should contact OJM Group to facilitate getting your ebook copy of one of our books or to arrange for the delivery of a printed copy of one of our books. You can also, while at our website, ojmgroup.com, sign up for our newsletter, which will include links to past presentations and updates on presentations coming up. It will also give you a chance to sign up for our monthly market commentary, and it will give you the opportunity to sign up for a free consultation where you can ask questions of our investment and financial advisors. If you have any questions for me, again, my name is Jason Wainscott, and you can go to ojmgroup.com to find my contact information. If you have any questions or if you'd like a copy of any of the slides, feel free to email me. Again, thanks for checking us out.